Hi everybody, Tom Willard here with the info video. This info video is going to be about fading a gap. Now, gap trades are a very lucrative part of what we teach from both the intraday as well as a swing trading perspective. You can use gaps to aid you in getting in and out of positions with regards to stuff you hold overnight or for multiple weeks, as well as intraday trading. Particularly, we're going to focus on the intraday aspect of this. And gaps, typically, people like to some people, there's two camps really from what I found. There's a camp that if a gap is up, they're always looking long, and if the gap is down, they're always looking short. And there's another camp that if a gap is up, they're always looking short, and if a gap is down, they're always looking long. They're looking to quote unquote fade the gap. Now that's the particular discussion here that I'm going to have, but I want you to know that flexibility is key. Not all gaps should be faded that gap up. And vice versa on the downside. Before we continue, please read this trading and investing disclaimer. Feel free to pause the video here if you need to. This daily chart shows the gap up in the particular issue. You can see it's making a weak attempt at a move higher, and you'll see that the sloppiness here, 10 to 12 days of sloppy, nervous trading, which means there's a lot of gaps, there's a lot of engulfing candles where the ranges are wide and whippy, showing indecision, uncertainty. And now we've got 2 days where we've closed higher, and then we have a gap up. And this is a prime situation where with training you can look to short this. Now again, this is not every daily chart that looks like this does not mean you automatically short. However, with regards to the sector and all the other factors that I've tied in here based on what we train, how we train people, this was a premier one to look for the short side. And here's the gap up, here's the close from the previous day, and here's the gap up in the morning. And I had this on my top 6 list to watch as a short for this particular day, and boy did it turn out to be a great winner. So continuing on to the 5-minute chart. This 5-minute chart shows you everything you need to know. 5-minute chart's a nice chart to trade from the daily intraday basis. And you can see the very first 5-minute bar when the market opened here, the dashed line, it was a giant red candle. That indicates weakness. Now, there's a lot of factors to consider. The market, the sector, where the markets come from, where the sectors come from, what are the sister stocks doing in this particular sector. But when you see this type of weakness, you can look to try to continue the movement lower and follow it lower. As it shows weakness, you look to get short. And there are 2 amazing entries just shown on this 5-minute chart that you could pop into and pull out great money. One of the situations right here is where you could get in and you short just 1,000 shares and you can make $300 in a matter of 10 to 15 minutes. So it's a pretty lucrative way that if you can identify the situation here on the intraday chart, couple it with the multiple time frame analysis as well as the market, the sector, and a lot of the other internals aspects, you can make great money in a matter of 10, 15, 20 minutes in a lot of cases. And I notice a lot of my trades, I don't hold them for more than 30 minutes, and they make great income. Hope you found this video very useful. Feel free to visit my site to sign up for other free trading tips and programs. Thank you for visiting me, and we look forward to talking to you in the next info video. Have a great week.